Welcome back, and we are discussing gold right now, which has seen a complete sell-off. A 19-month lows is what we've seen into the international markets. Peter, let me begin with you. What is your sense on the reasons behind this? Is it the strength in US dollar, the safe haven bank completely out of the window? What is your sense onto this?
You know, 1170, 1180, I would have thought that was, lows. But again, that uncertainty factor, everyone's just piling into US dollar. I think gold market in some ways has been oversold. I wouldn't be surprised to see it bounce from here. It'll take the others up with it naturally, little brother silver and probably platinum a little bit. But I feel as though that the gold market's got the potential to bounce, and the shorts may get squeezed. Let's just wait and see. But, those sort of markets, people are trading, it's a 24 by 5 market. And, the amount of, I've, been watching COMEX numbers, conscious as far as what the dollar trade is. And, you've got many screens doing many different things. And I think a lot of traders at the moment are just really looking for an opportunity to, get long gold. And that may happen, in the next couple of trading sessions. Sometimes the lights change and traders look for opportunity. Shorts will get squeezed and they'll, bang it up $10 or $15, $20 very, very quickly.
Well, we already have seen that coming in, and another $15 up from here would be good news. But Peter, you mentioned about silver. What is your sense on that? Because that follows a bit of industrial metals as well, where also has been a lot of pressure there.
Well, exactly, from an industrial side. I think it'll probably go in lockstep with gold. It might, from a correlation, if gold can, jump 1 to 2, quick percent, I think silver will probably go up with the same momentum. They're closely correlated at the moment. I don't see any, breakouts on either side. You might see, a little bit further, but, at the present, I'd just keep a very close eye on the gold market. And if you're trading silver, that'll get an uplift as well, if that's where the market trends to.
Absolutely. Kunal, bringing you in back again. And while, of course, it is the international markets which have been very, very volatile, but the Indian rupee has been playing into the calculations here as well. In the Indian market terms, then what is your sense for the gold and silver prices going forward from here?
Yeah, first, I think the major reason for this downside in gold and silver is US GDP number. I mean, at the start of the year, no one even expected in a wild imagination that US would come up with a GDP growth rate of 4.1%. And it actually happened. And that caused dollar to strengthen sharply against the basket of currencies and led to a fall in gold and silver prices. So I had been bullish on gold and silver. It had come down. And now I have more reason to be more bullish at these levels, because I think from here, the downside is very limited. Going forward, I see a great opportunity for somebody who has not entered the position. This is the great time to build your position for the view horizon of 6 to 8 months. And I think gold prices are going to be much higher than where they are trading right now. So $1180 in India. In India, I think at current levels, you should buy. And I believe that in next 6 to 8 months, you are going to see by March 2019, you will see gold somewhere again trading near 29,900 to 30,300, these kind of levels. I'm not sure where the currency would be at that juncture, but I think this is the best time for Indians who have not accumulated gold. Start accumulating it. In 6 to 9 months down the line, you are going to see a good amount of returns in your gold portfolios.
Colin, what Kunal is saying must be clearly music to your ears right now.
Yeah, it totally is. I think I'm going to take a clip recording of what Kunal just said and just spread it in our whole industry.
Kunal, I suggest you charge royalty for that. But Colin, coming back to you, when you say 8,000 crores of business done at IIJS, break it down for us. What really precious metal are you taking into account here?
The large chunk obviously is gold. So, we don't obviously get exact numbers because there are 1,500 companies exhibiting and 40,000 visitors. But our guesstimate is that 75% of the business transacted over there is plain gold jewelry, and 20-25% is diamond jewelry plus polki and, the other sections. So, and this is obviously broken down into mainstream, mass manufactured, and there's couture too. So, it's everything which you can possibly buy in a piece of jewelry. There's colored stones, there's CZ jewelry, so there's everything. in this.
Colin, also tell us, we haven't seen India actually spruce up a lot in case of physical buying. The investment buying has been on the weaker side. The coins and bars demand also has seen a decline. The other asset classes like equities perhaps have done well. How are you looking to bring gold back into the mainstream? What are the campaigns GJEPC is working with, especially as we get into the festivities now?
See, actually, GJEPC as the apex industry body is doing, I would say, a lot of things. So we're battling on all fronts. On one side, we're working with the government to form a domestic trade council. On the second side, we're also working very hard on having a special gold policy, so that this industry is treated separately. On the third side, we're also working on with the government to somehow make it easily available for exporters to avail of gold, whether it is gold loan schemes, whether it is smaller quantities of gold. So we're also working on that front. Besides that, we're doing all these buyer-seller meets, exhibitions, trade facilitation, so that we make it easier for the manufacturer to access retailers. Having said that, on the demand side, we're running, I guess, I hope all of you all have seen it, this huge campaign. So there are hoardings all from, especially in Bombay, from Bandra to Borivali. We have hoardings, we're doing Times of India, Economic Times, hopefully working with CNBC, TV18. So we have this whole campaign happening all over sections, and where we're specially emphasizing on the employment the industry generates, the contribution that our industry makes to the country's GDP, and the foreign exchange that we earn for the country. Besides that, we're obviously even talking about the softer aspects of what our industry contributes. It's to the health and the Mediclaim for all our workers. It's all kinds of things. So I guess everyone will see a lot more action happening on that front over the next 3-4 months. And
Colin,
we're hoping to catch...
Also coming on the export part of it, what are the numbers there? Because in the middle, somewhere in between, we did see those numbers dip as well.
Exports this year, and what we guesstimate, will be down between 5 and 10%, to be honest, in dollar terms. In rupee terms, since the rupee is devalued, and maybe, if it devalues a little bit before the 31st of March, then maybe we keep the numbers. But in dollar terms, we see a slight dip of between 5 and 10%.
So what are the markets that you're watching out for right now, foreign exports?
Our main markets continue to be US and China. US, as our fellow panelists have also said, is very volatile with this whole trade war happening. So, who knows, anything can happen in the next 2 quarters. But if all things remain equal, then America actually, especially with the GDP growth that they've had and consumer demand being very strong, we expect it to be a very strong Christmas over there, and Valentine's Day and Mother's Day. And China is also coming back very nicely. So our main 2 markets seem to be in a safe place right now. Our problems are more because of, the banking crisis that we've had. So,
yes,
there's a little curb on working capital limits for all the exporters, and that's affecting export. It's not the macro level demand. Actually, demand has been probably the best it's been in the last 3 years.
So are those problems anywhere near being tackled? I understand you are talking to the government quite closely.
We're talking to the government, we're talking to the bankers. I guess it's a process, like, any crisis, and like someone said, never waste a good crisis. So, we are trying to do the best, to mitigate the risks of bankers so that they have a good experience working with our industries. We want to make sure good promoters continue to get finance. But I think realistically, it's going to take a couple of quarters before
you see those very strong numbers come back.
Yeah, before the strong numbers come back, banks get renewed confidence in our industry, and exports are back.
All right. But, Kunal, let me come back to you. With such positive moves that we have seen, and very bullish view that you are holding on gold and perhaps silver as well, what level would you advise buying right now, and how much of money deployment or a portfolio holding would you suggest when it comes to gold?
Yeah, just adding to what I said before, the US inflation is picking up. There's a lot of uncertainty which is there in the market going forward in next 2 quarters. And I believe that the ideal percentage one should have in gold is definitely 8 to 10%. I mean, if you see what's happening in gold market, no one is talking about gold. I mean, before 2006-07, this similar scenario was generated. I mean, the searches in gold on Google is at the lowest level. The positions on COMEX or short positions are at record low. So there are no, in fact, there are no reason on the textbook available which will say, okay, gold is bullish. But the thing is, everything is priced in. So US strong GDP, weak Indian Chinese demand, everything is priced in. So any trigger from here, may it be in form of trade war, I don't know what's going to come. I think it's going to trigger a massive short covering. So I'm eyeing conservatively by March 2019, gold prices should again test $1,300. That is a conservative target which I'm having. And I may sound a little over-optimistic at this juncture. I don't know what is going to be the trigger, but I think gold prices are going to be much higher. And for silver also, I'm holding a similar view. Silver also looking bullish to me. And on silver also, I'm expecting levels of 17.5, 18, at least conservatively by March 2019.
All right, gentlemen, you have been a very, very bullish panel, really, when it comes to gold, in sense of demand from Colin, in sense of price movement from Kunal, and of course the global cues coming in from you, Peter, as well. On that very positive note, that's a wrap on this edition of Commodity Champions. Thank you so much for watching.